Welcome, welcome, welcome. This is Dave Rogers with Bill Wilson, and today we have a guest. Hello, Justin Rogers, to talk about crypto today with Canada Startup. Thank you so much for joining us.
Pleasure to be here. Thank you for having me.
Bill, would you like to start off with maybe the basic question about what the history about crypto, or any questions that you might have about it?
Yeah, like the history, what started it? I guess, the first thing that comes to my mind, why did it start?
Well, we can talk about, I guess for most people, the start of crypto is definitely Bitcoin, right? Bitcoin about 10 to 12 years ago, created on this SHA-256 algorithm, essentially was a project to try to create a decentralized form of currency, right? And that, for the most part, is what crypto has strived to do over the last 10 years or so, to have this sort of immutable ledger of transactions, and that can be a way to transfer values between decentralized parties. And I think that the great thing about the last couple of years is you've definitely seen that, definition of a blockchain and that very basic manifestation in Bitcoin, and you've seen it really take over and blow up. And I think over the last year or so, a lot of popularity has come into the system. I think part of that's because of the pandemic and what's that sort of done to the US dollar. People are looking for alternative ways to store their value. And yeah, just because of what's happening within the space, that's also created a lot of buzz. And I think now we're really looking at Bitcoin and Ethereum, and we're really starting to have those conversations about, can it replace gold? Can it replace fiat? And it's just a crazy, exciting time right now.
Well, let's take a look at the chart, because that's one of the things that young people like you will be looking at and maybe trade off of. And if you see this chart right now, this is Bitcoin on the left here. You got pretty much a confident buy, and this is the chart of Bitcoin over the last 5 years. And so, Bill, when you see something like that, what comes to mind?
Well, if it's going to keep going up almost straight, I mean, that's got to be pretty positive.
And Justin, you've been doing some technical analysis about it. This is, again, the buy. It's not a super strong buy right now, but it's a buy. We've got the chart suggesting that we might come back off of their support line. What's your view right now on the short term for Bitcoin?
Well, I think over the last couple weeks, and probably for maybe a week or two to come, or so, in the short term, I think what we're seeing right now is we're definitely seeing Bitcoin find more comfort within the level. It's definitely ranging where it is within sort of, I know, the crypto space. It's a great time right now for altcoins. Basically any cryptocurrency that's not Bitcoin. So we're seeing a lot of growth in those areas. But I think, as we go down the line, I think Bitcoin is the institution's choice. Bitcoin will be like the first one to really break into that mainstream. So I do think that we'll start to see a lot of that money flow back into Bitcoin within the next couple months. I know, like, a lot of, for example, like Citibank had their 300K end of year prediction. I know JP Morgan had closer to 100K. I'm not really, here to give that sort of prediction, but we're, in the hots of a crypto bull market right now, and it's a great time to be here.
Go ahead, Bill. I think you might have a question about that. There was a little question about altcoin. There was
what's
Bitcoin,
altcoin and
Ethereum.
How does it
These
differ
are
from Bitcoin?
Yes.
So yeah, I think that, like the second largest cryptocurrency is Ethereum, right? So I think that one people might be a bit more familiar with. But yeah, like altcoin is just loosely defined as anything that's not Bitcoin, right? Any other cryptocurrency that aims to do something a little bit different, and yeah, just trade separately. Usually, we put them separately because a lot of the times a lot of money flows between something like Bitcoin and then all these alternative projects. So yeah, Ethereum would be like probably the the main example here. Ethereum is slightly different to Bitcoin, and it really rose to prominence because of its ability to support more decentralized applications. So a lot of very large crypto projects are built on the Ethereum blockchain, mainly because Ethereum introduced this great thing called smart contracts, the ability to sort of program agreements between two decentralized parties in order, so, things such as just like the transfer of funds and that sort of thing. Also, it works on a proof of stake instead of a proof of work like Bitcoin does. So there are these sort of marginal differences between different projects that helps us to define different altcoins as opposed to Bitcoin. But I think for the general investor, we can just say that an altcoin is a cryptocurrency that is not Bitcoin.
Great. And so we got Bitcoin as the biggest, consisting probably 80%, 90% of the market. Second is Ethereum. And then you have 100 or more altcoins. Pretty much anyone in a few groups can create an altcoin and actually have it traded against Bitcoin, against Ethereum. Would that be fairly accurate?
Well, I'd say the interesting thing that you said there was that you said that Bitcoin is about 85 to 90%, when in fact it's actually closer to 66, 67%. So we are seeing a lot more popularity in these alternative projects than I guess like someone in the mainstream might initially think. But yeah, I'd say Bitcoin's still the dominant player, and probably will be for the foreseeable future. Would
you like to share one or two ways that somebody could get started? I realize you introduced this to people like Bill and I a few times, yet I guess what's the difference between a wallet versus maybe using a platform like Wealthsimple versus an ETF, an exchange traded fund?
Okay, well, I think to sort of hit at I guess like the different ways of one might go ahead and invest in cryptocurrencies. You definitely have, I think, for the mainstream retail investor, something such as like a GBTC or an ETF. I don't know if we officially have an ETF yet on the market, but you have funds like GBTC from Grayscale. You can invest in companies like MicroStrategy or Square that have a lot of their crypto exposure, a lot of their balance sheet exposure in Bitcoin. And those are sort of those are ways to gain exposure in your own portfolio. And you can do that through however you'd normally trade your Canadian or US equities. But I'm not entirely sure that gives you the underlying right to the crypto asset, right? And so when you have a wallet or when you use a crypto exchange, such as Coinbase, Binance, some big ones, and maybe Wealthsimple, I'd have to do a little more research myself. But that, you have the address and the currencies directly put into your account. I'd say for investors who just want a little bit of exposure, I think the former is definitely a great starting point. But the problems start to arise when you want to move your funds within the crypto space. Makes it a lot harder to do so if you're pegged to whatever stock that you purchased. For example, I probably currently have around exposure to 7 or 8 different cryptocurrencies, and I wouldn't be able to do that if I didn't have a wallet. And I guess to sort of go into what a wallet is, it's like how you have a wallet for money and your different credit cards. It's sort of a place where you keep your different addresses, and your address is basically your profile or your crypto identity that ties your funds or your funds to yourself, because you're the owner of that address. And yeah, just because there's no physical cash or anything, right? So your wallet is your wallet.
And this is where there's a lot of in the press that if you lose your password, you lose your Bitcoins, and there's people that have losing $100 million because they forget their password, and there's just no way to get the money back. Would that be accurate?
Yeah. I mean, like it's definitely not dropping your wallet in the park per se, but I think you know, when you're trying to build something that's purely decentralized and purely like, you know, I guess a product of the people, I think that level of security, like you need to have that password or that private key to be able to access your funds. Like it's probably for the best, right? But yes, there's definitely an emphasis on don't lose your credentials because that can be pretty bad.
Let's put one more chart up here to get your insights into. And are you able to see this?
Yeah.
And so talk to me a little bit about Ethereum. It's something that right now the market is fairly bullish on. Mm-hmm. And what does this chart sort of say to you? And is this something that you've been following?
Yeah, so I think I've definitely liked Ethereum based off its sort of relative operability to Bitcoin. There's, you know, so like I mentioned, there's a lot of apps that are built on the Ethereum blockchain, and it's because of things like smart contracts that allow it to do so. There are other players in the space that strive to do what Ethereum does. Polkadot is one example that comes to mind. I think it's a top 5 market cap right now. But yeah, I really liked ETH. I think I've always had more ETH than Bitcoin, and it's been a bit of a shame just because of like the moves Bitcoin has made over the last 2 months, and Ethereum has sort of lagged behind. But definitely the market sentiment is probably currently more bullish on Ethereum than Bitcoin because typically what you see is people will buy into Bitcoin and then that money will slowly flow into the altcoins, and Ethereum is usually the biggest collector of those. If you look at the 2017, 2018, that initial all-time high, you'll see that Ethereum hit their all-time high after Bitcoin. And I don't know if you're able to pull up the chart, but I've really been a fan of the ETH BTC chart. So, you know, Ethereum per Bitcoin. At the peak in 2017, I think Ethereum was able to trade at over 1/10 of a Bitcoin. So if we saw that relative strength now, right, that would be, you know, 3.5, maybe 4 grand once we actually get there. And right now we're trading it at about 0.04. So crazy room for growth here. If we expect to see, or if we see what we expect to from a crypto bull market. And I think that sort of logic has really transcended through multiple different coins in the space. And we're really just waiting to see if that's
what you're saying, is it?
Yeah, exactly. So another graph that you like that I know you sort of referenced before, but if you want to search BTC.D, so that'll show you the Bitcoin dominance, right? And I think that's like what we talked about. Maybe you thought it was 90, it's 65.9 right now. And that's just that's a good indicator to show where the money in the crypto space is. So you'll see that at the turn of the year, Bitcoin dominance was about 72.6%, right? That's when Bitcoin was making its all-time highs. That's when we really saw it rampage through, and we didn't really see that similar reaction from coins such as Ethereum. But now over the, you know, since the turn of the year, we've really started to see the altcoin dominance grow, and you can see that through the decreasing Bitcoin dominance.
Bill, that's a lot to digest in a couple of minutes. What question might you have or thought as we sort of bring?
If I am understanding this correctly, essentially, this is like the people that deal in different regular country currencies. So if I'm trading Canadian American dollars, would that be the same as like trading Bitcoin and Ethereum?
Yeah, absolutely.
I'm just trying to, I guess what I'd like to try and do is understand it in terms of an old boy here trying to figure out, okay, I'm used to paper and
Right.
coins. What is this compared to that? Like, dumb it down for I guess a boomer or whatever.
Yeah.
What, but I think I understand what you're saying though, but if you could please, that'd be great.
Yeah, and I think when you look at, for example, like the regular ETH chart and the Bitcoin chart that you're used to seeing, that's like looking at that's like opening Yahoo Finance and looking at like the Apple chart, right? And that's because all of those are denominated in US dollar. But I think you're absolutely right. Like when we look at Bitcoin ETH, that's definitely like looking at Forex pairs and being like, like USD to the CAD or something. And yeah, like I think that actually raises a really interesting conversation about where cryptocurrencies really slide in if you were to compare it to a traditional asset. I've definitely had a lot of fun sort of almost working on that like thought piece myself, is to really understand, is Bitcoin gonna replace gold? Is Bitcoin gonna slide in as like an equity, like a stock, or is Bitcoin gonna try to replace like fiat currency, and we're going to use it as a medium of exchange, or all three, right? Probably not all three. I don't think those three can exist stably simultaneously. But I think we're sort of in a hang state of trying to figure that out. And again, like just to sort of go in with the altcoins again, I think you have different projects that aim to satisfy one of those things really well. You might have heard of like the Ripple the Ripple SEC like investigation, but Ripple was created to try to be a medium of exchange. Probably won't be anymore, but like you have, that's how people sort of alter them. But yeah, no, there's a lot to digest there for sure.
Well, there's this element.
If I remember correctly, when Bitcoin first came out, were people actually buying like physical goods with that? I remember hearing people buying a house with Bitcoin. Like, is that just all rumor and myth, or were people actually able to do that sort of thing?
I'll follow up that there were places that would accept Bitcoin in exchange. Bali was very progressive, that you could go and pay for your meal, your hotel. They would create mediums of exchange, and the Bitcoin there was to be able to transact goods and services. And so there are still some places that accept Bitcoin as a currency of exchange. What Justin was saying also is that as a store of value, that someone like MicroStrategies, who now owns over $1 billion in Bitcoin, he's converted his company's cash reserves into Bitcoin. His rationale is, would you rather have Bitcoin, which has a limit of 21 million of these products, versus the American currency that just can print as much money as they want? Which one is more stable? And he's put his bet up, his money where his mouth is. And in the last 3 months, we've had quite a few of the big players in the States actually not looking at Bitcoin so rudely. They're starting to say there might be a position in your portfolio that could be in an alternative currency. And so, Justin, I think Bill and I were both curious, what percentage do you think perhaps us boomers might have in our assets in Bitcoin yet? And then also, given yourself being 20 something, what percentage would you like to have of your assets in Bitcoin?
Well, yeah, that's a lot of great points brought up there. And yeah, like again, I know like the one famous story about Bitcoin being used as a medium of exchange was like someone bought a pizza with it, and that ended up being like a $300,000 pizza in like today's value. So yeah, and you have like things like Bitcoin ATMs, like you'd have cash ATMs. So it is definitely usable, but I think just with the high variability in price, it's hard to sort of peg that value to anything. And like my dad mentioned, yeah, like sort of with the printing of the US dollar, like I remember the stat was that the M0 money supply in the US was 3.5 trillion beginning of last year. And then it, as soon as COVID hit, it spiked up to $5 trillion. And that sort of, yeah, like that ability for the central bank to have that much power over their currency and their ability to just print that much definitely makes that $21 million hard cap seem a lot more sustainable. And especially now with like the Democratic government coming in, you know, a lot of people are thinking that that's only gonna screw with inflation even more. So there you go. And I think that sort of leads into the question about like people and how much they should invest in it. I don't necessarily think that it can be viewed as like some sort of hedge against like any sort of hedge. I think right now, like the healthiest thing to do is to look at it as one of your riskier stock allocations. Like if you have like if you have part of your portfolio allocated to assets that you're looking to sort of 2x, but it might also go to 0, it might still sort of have to go into that category. But I think and doing some reading online, I think there's definitely been like recommendations of about 5 to 10% of your portfolio. And I mean, I know myself, I have most of my portfolio in cryptocurrencies right now. It's really hard to see your TFSA do like 15-20% in the year, and then look at your crypto portfolio and see how well that's done over the last couple months and go back. Especially, when I guess like you're a student like me and, you're not really dealing with a whole lot of money, the ability to take that extra risk is great.
What type of swings have you seen in a day, just to give our listeners a view? I realize Ethereum has moved incredibly over the last 2 or 3 weeks. Just give Bill an example of the type of movement that you see in either Bitcoin or Ethereum in 1 day or 2 days, and both the highs and the lows, and give a little interpretation of how it makes you feel.
Yeah, absolutely. I'm just pulling up the Bitcoin chart now, but I think we saw it this year, right? Like around the 8th or so, the 9th or so, Bitcoin was at 40K, and then it nosedived about 30%. Which for any like in a day,
that's US dollars.
That's US dollars, yeah.
So we're talking 54,000 Canadian down to like 44,000 Canadian in 48 hours.
Wow.
In something like that, yeah.
That's
so I have at when the day started on January 10th, it was at 41,000 US dollars. And then when the day started on January 11th, it was something like 30,000 US dollars. So an $11,000 crash in 1 day. And I remember like the funny thing, I texted in our chat was that as soon as CNN declared Bitcoin in a bear market, it bounced right back up to 39,000. I'm trading at about 36. So it was a 30% correction that reverted itself all in the matter of 4 days.
And so when you watch that, what goes through your mind? Is it like playing a video game, or are you actually attached to the currency, or is there fear, or what's going through your mind?
Well, yeah, I mean, that was personally, that was like a great experience because I mean, like I've been interested in like the space for a while, like since, probably right about like a year now. Actually, no, so not a while, like very, very little amount of time, but I've been very interested for about a year, but I never actually dived in myself to the last couple of months. And this was really the first sort of major correction that I got to be a part of. And so, a lot of mistakes were made, like the FUD, the uncertainty. If you would have told me like 4 days, 5 days prior that I'd have a chance to buy it back at 30K, like anyone would be like, that's a great correct, like, like buy the dip, right? But then as soon as it goes there, you're like, oh no, like, you have all this FUD. So yeah, it definitely taught me to, you know, make sure to have a plan and to trade the plan. Well, it's like the saying, like plan the trade and trade the plan or whatever. So that was definitely a great learning experience. And yeah, like I remember seeing something, and like I remember seeing like a tweet or something, and it said that the less time I spend looking at charts, the more money I make. And I think that that's definitely, like, you know, you can't trade with your heart, right? You gotta make sure that that you stick to it, especially in a market of such high volatility. But it's been a great practice for things like 30-minute, 1 hour swing trades and that kind of stuff, and just continuously trying to find the trend. So I can definitely see why it's the first movers to really have interest in the space are the day traders and are the high frequency, like swing traders and those people.
Is there room for someone like Bill and I where we have a position, a small position, maybe 2, 5, 10% of the portfolio, yet we do make it more of a longer term investment, maybe even accumulation? Is that something that might be, I know we're not financial advisors, and this is strictly for education. Yet, what might you say to us on that?
Yeah, I mean, first of all, obviously do your own research, most important thing. But yeah, I think when you just buy and hold, or as the crypto people like to call hodl. So when you choose to hodl the asset, then you can easily survive like those 30% swings, right? I think the only problem is when you start trading it and you start, you know, looking at derivatives, that's where it can make or break you. But in that case, like if you're looking for a longer term investment, I definitely would stress and emphasize the potential of the technology. I know it's like often laughed about in like the trading community, is that like you're in it for the tech, but you know, like I think if you go over a couple of the points that we talked about today, things such as the U.S. money supply, and you know, even the mindset of younger people, right? Like millennials are argued to be the people who might drive this sort of crypto adoption. There's a lot of very good bullish long-term cases for Bitcoin. So I think that there's, you know, like if you're looking to hold it for more than a year or two, and you have a price target of $100,000 or $150,000, then you're not as bothered if you're going to buy it at 30 or 34 or 36K, right? But it's about having that conviction and having that research, especially if you're looking to go in and buy something that's not Bitcoin, like a different cryptocurrency. I think is just to have a brief understanding of the technology. It'll be great to sort of go and make sure you know what like consensus is. Go ahead and make sure, you know, how does a blockchain work, right? Like what is the encryption? What are like keys? What's a Merkle tree for, like, I think that was definitely something that was great about my learning experience. And yeah, just if you wouldn't buy like Apple shares without knowing what they did, you shouldn't buy Bitcoin without knowing what it does either.
Very good advice. What a great way to bring it to completion, Justin, on that. Bill, any sort of last thought or final question as we bring it to a close?
What happens, like, will this 21, the number you said for the cap of the Bitcoin, can that ever be reached, and what happens at that point?
That's a great question. And so the way, like, I guess like the way Bitcoin is created, right? And you might have heard a little bit about this, is you have these like sort of computers, and they're running algorithms, and they're trying to see what numbers fit like an algorithm that would meet like that would be able to add onto the blockchain. And so you have like all these Bitcoin mines that are basically just rows and rows of computers trying to just like running algorithms and running numbers and trialing and erroring different things over and over again. So the total number of solutions to that algorithm is 21 million. And essentially what happens is every time a mine is able to create one, or is able to add to the blockchain per se, they get like a reward. And every X number or so Bitcoins have been discovered, the reward halves, and it's called a halving period. So we had one, I think about a year ago, where the amount you get for discovering or for adding to the blockchain goes from, say, 13 Bitcoin to 6.5 Bitcoin, and it'll keep halving until all the Bitcoins are discovered.
So another spin on that, Bill, is that's a number that the Bitcoin bulls are definitely throwing at you. They're saying there's a hard ceiling. It's only going to be 21 million. And then you've got people that are losing their wallets. So the supply is actually decreasing. And so that's where you get a supply and demand, and you're getting a little bit of fear of missing out. And the other thing I wanted to sort of point out was that you don't have to go spend 40,000. That's what's very friendly about for the millennials and the Robin hoodies, that you can just go buy $100 today, or $200 today, or $500 today. And then the third element is that there are a lot of facilitators that are letting margin become very comfortable in the cryptocurrency market. So if you want to go trade crypto, there's financiers that will lend you against your Bitcoin so you can have huge leverage. So there's a bit of a buildup there that what would you call that, Justin? Is it liquidity, or is it creating a bit of a frenzy? Do you have a word that might describe that?
That's a good question. I don't know. Like, I mean, some people would say bubble, right? It's definitely something you have to remain cognizant of. Is as soon as Grayscale, for example, if Grayscale ever sold all their Bitcoin, that would send the market into turmoil, right? Like, and then a lot of people will get liquidated, and then it'll like cause a whole thing.
One little point there: Grayscale is right now supposedly the biggest advertiser on CNBC, and so Grayscale in the last 2 months has attracted, I believe, over $1 billion for their funds. And they're investing very heavily in advertising on CNBC. So again, creating an ecosystem, or potentially an echo chamber that feeds the euphoria of the Bitcoin. So, Justin, thank you very much for your time today. Bill, thank you so very much for your time. What would be perhaps your closing statement or thought? Let's start with Justin.
Yeah, I think it's a great time right now to definitely explore and learn more. I did always think about how once Bitcoin hits much larger and larger numbers, I do see an argument that people will be like, well, I could have bought it 10 years ago for $1. I'm not going to buy it now for 50 or 30,000. But I do think that, like with tools like Robinhood and Wealthsimple, especially, and just even PayPal allowing that sort of stuff, I think the main difference between what we're seeing now and what we saw in 2017, when it went up and then crashed right back down, is we're definitely seeing a lot more institutional play than we did previously. And I think that's probably the largest testament to any sort of long-term viability for something like Bitcoin and cryptocurrency.
And I'll just bring in, we have a comment from Alex. He's really enjoying trading the Bitcoin and the crypto on Wealthsimple's platform. A similar thing that's happening on Robinhood and Webull and a lot of the platforms in the States. And then, as Justin's saying, the two big things have happened in the last sort of 6 weeks has been Square and PayPal both agreeing to support trading of the cryptocurrencies. And with that, Bill, over to you for the last word of today's Canada Startup. I'm really grateful for both of you to coming aboard. Thank you to all of our listeners who who share their opinions and thoughts. And what would you have to say today, Bill?
This has been great, Justin. Thank you very much. I'm slowly getting clearer on all this. So I really enjoyed listening to you. I learned a lot. So thank you very much. So now it's like, I want to go out and find some resources to read up on it a bit more. It sounds exciting. I think it's definitely worth something to get into. And the nice thing, like you're saying, Dave, is you don't have to spend, you can spend a little bit to sort of dip your toe in the water. And you know, start to see if it's somewhere where you want to go. And I don't know, I mean, some of the things of what Justin's saying, it seems like, okay, this, you know, 10, 15 years down the road, this might be a bigger thing. So it's worth getting in now, you know, even if it's, you know, your analogy about, oh, I could have bought it for $1 a while ago, but yeah, there's been a lot of things like that. So you know what, time to be different and put a little bit in now and, you know, dip my toe in the water and see what happens.
And I'm going to ask Justin if in the comments on the Facebook, maybe add a link or two. Bill can take a look. And we invite everybody who might be learning a little bit about Bitcoin, cryptocurrency, even some of the security, to add a comment, add a link, and that will really help everyone on the channel learn a lot more about ways to invest and be involved in perhaps one of the more fascinating emerging asset classes in the world right now. With that, thank you very much, guys. Have a great week ahead. This is Dave Rogers, Canada Startup. I invite everybody to check out our YouTube channel, Continual Shift, and to check out our meetup group that we get together every Tuesday at 6:30 p.m. Thanks very much. Have a great week ahead.
Thanks, Dave. Thanks, Justin.